For the first time in almost 2.5 years, Turkey's central bank has raised interest rates to 15% from just under 9%. It's a shift away from the unorthodox policies of President Recep Tayyip Erdogan, who has championed low rates, despite the Turkish lira's rapid devaluation. The country's currency woes have had serious consequences for normal Turks, as our correspondent Yulia Han reports.
There is almost nothing you can't buy here in Eminönü. The neighborhood is one of Istanbul's oldest and busiest market areas, and it's seen as a bellwether for the Turkish economy. Right now, it seems, neither shop owners nor customers are happy.
Our sales have dropped by 50%. There are price increases every day and the exchange rate fluctuates. This is giving us a hard time. Customers who used to buy a kilo are only now buying half a kilo or even less. My expectation is that the economy will improve, that inflation will disappear. But I don't think it will. I just hope it won't get even worse.
We have been struggling with this crisis for a long time, and we've been very patient. It's time for things to get better.
Since President Recep Tayyip Erdogan won re-election in May, the value of the Turkish lira has tumbled to new lows. And inflation is officially near 40%, leaving many unable to afford even basic foodstuff. Analysts say President Erdogan's unorthodox economic policies have made things worse, especially his insistence on low interest rates when inflation is running high. Now he's appointed a new economic team to overcome the crisis. Hafize Gaye Erkan, a former Wall Street executive, is Turkey's new central bank governor. The new finance minister, Mehmet Şimşek, an internationally renowned economist, has pledged to return to rational policies to fight inflation. Experts like Ozan Shakar, however, remain cautious. Even if the new team were to convince Erdogan of a policy shift, he says, Turkey's economy wouldn't just swiftly recover.
Trust is lost between those two camps. The problem is that our economy has been derailed so much in the last few years. There are no easy or quick fixes to it. It will take many years to fix, and whatever you do, it will be very painful. If you are to increase interest rates to lower inflation, we will be faced with a huge risk of very high unemployment. So whether the public and the president will actually have the patience to see through this transformation remains yet to be seen.
Here at the market in Eminönü, no one wants to hear about more economic pain. People want prices to go down and the economy to heal. But things might get more difficult before they can get better. And the news now confirming that monetary policy shift to counter sky-high inflation here in Turkey that has left so many people struggling to get by. The key interest rate was hiked to 15%, maybe not to the degree some analysts had expected, but it seems more increases are on the horizon, and that is why many economists here in the country see this as a first step in the right direction, finally signaling a return toward more conventional economic policies.
Timothy Ash is an economist at Blue Bay Asset Management in London, and he's an associate fellow at Chatham House. Tim, thanks for joining us. Rates lifted to 15%. I think you were expecting a lot more, weren't you? How do you look at this? What's happened?
Well, look, inflation's 40%, so 15% policy rates means negative 25%. Real rates, hard to see capital inflows with such large negative real rates. Turkey has a balance of payments problem, large current account deficit, needs to close that. How does it close it? You know, if it's not going to hike rates, it's got to let the currency adjust. And actually, Şimşek that's the finance minister, has just come out just now saying that he thinks the FX regime will attract FX inflows, or capital inflows, I should say. It suggests they're going to let the exchange rate rather than interest rates do the heavy lifting in terms of closing the trade and current account deficit.
Do you consider this a turnaround for Turkey's monetary policy in any degree, or is this sort of a slow dip into the water?
Well, I mean, until in the run-up to elections, they managed the exchange rate. They tried to keep it as a nominal anchor, at least in a couple of months, 6 months or so leading up to the election. Prior to that, they had lots of devaluation because of Erdogan's crazy interest rate policies. I think now we're going to see a bit of both, right? We're going to see the currency allowed to adjust, and we're going to see some rate hikes to kind of manage the inflationary effect of that weaker currency, the pass-through to inflation from an exchange rate weakness. Combination of both. Market probably wants much more front loading of rate hikes. Remember here, there's the memory. The problem that Şimşek and the new governor, Erdogan, have is the market remembers a previous Orthodox governor, Naci Agbal, who hiked rates and was removed kind of 6 months into the job. So they're very nervous about that. They're nervous that basically, Şimşek and Erdogan may want Orthodox policy and normalization rates, but actually they won't be in the job very long. So that's the real difficulty.
If you're a normal Turk, what does this decision mean for you and these several decisions that we've seen so far?
Well, credit's going to be still hard to get, I think, with such negative rates. The currency will adjust weaker. Short term probably means inflation, which is from a high base has come down a bit. Remember, it was 80%. 6 months or so down the line, it's come down to around 40. I think the problem it'll probably stick around this level, maybe go a bit higher, until we see some rebalancing on the current account, helping anchor the exchange rate, and then maybe we'll see some better news on the inflation front. We're probably like 6 to 12 months down the line.
But ultimately, I want to make sure that I understand you do not really see this as a complete turnaround by Erdogan. He's ultimately the one calling the shots. As you mentioned, the markets have a memory of what's happened to previous governors. Is this sort of a trial balloon, and it could always be yanked away?
Well, we'll have to see if this is different. As I mentioned, the previous experience with Naci Agbal, he went to orthodoxy, hike rates, and got fired 6 months into the job. I tend to think that there's a different crew of advisors around Erdogan, and they're pushing a more orthodox agenda, and that drove the appointment of Şimşek as finance minister and Erdogan as governor. And perhaps, I'm hopeful that we'll see this move back to some kind of orthodoxy sustaining longer than last time. So, I'm a bit more hopeful, but unfortunately, the track record of Erdogan is intervening in monetary policy. That's the concern.
Timothy Ash with Blue Bay Asset Management in London. Thank you.